enabled. WazirX and CNBC TV18 present Crypto, Digital Assets of the Future.
Hello and a very warm welcome to our special series, WazirX and CNBC TV18 present Crypto, the Digital Assets of the Future. Joining us on the conversation today is a very special guest. He's Sanjay Phadke. He's from iSpirit. He's author of FinTech Future also and head partnerships by our network. Sanjay, hi, thank you so much for joining us. And I was reading a write-up that you recently written on cryptos and on how it can be useful in the Indian market. While of course there is a detailed paper on that, but the major point that you have perhaps want to put across is about financial inclusion, the SMEs on how they can be included into the India's cryptonomics, the new term that you have coined there. Tell us about it, and what is your sense on how easy is that going to be, and would SMEs, are they ready for that kind of financial inclusion?
I think we wrote that paper which you referred to on iSpirit website with a lot of experts both in and outside India. What we are really looking for is tracking the technologies that are developing around the world. And I think we in India obviously have to keep pace with that. But more importantly, what is the use of all these new technologies? We were really looking for the problems we need to solve and then find the right tools to solve the problems. So the problem that we are really trying to understand in greater detail is something that has been talked about for a long time now, and that's about the financial inclusion, right? And with specific focus on SMEs or small and medium enterprises. So there has been a lot of work, including a RBI report, which came a year and a half, 2 years back, which showed that the total unmet credit demand or capital requirement in the SME world, which is really small businesses, which could be individuals working as businesses in rural areas, in urban areas, students, proprietors, and so on and so forth, right? So it's an entire mass of businesses which are very large in India. So if you look at it, total businesses in India are close to 60 million, of which 10 million are really ones which have already a GST registered number. But the number of people of these, or the number of entities that receive financing as per the same report and other such, is roughly just about 25% of the overall $1 trillion, which is the overall bank credit in India. And we are trying to figure out, this is such a large mass of India. It's India 2, India 3, Bharat, as we call it, and so on and so forth. A lot of those have data now. A lot of those may not have bank accounts which are active, or have bank accounts, but they are just moderately active. But they definitely have data. They have a mobile, either a smartphone or a non-smart, that is feature phone. They're creating data. So, all of that is coming together at a time in 2021. And it's a very, very challenging time right now, though on the digital side, the inclusion on the digital has increased substantially because of the crisis. And we are trying to see how all these new technologies, whether it's blockchain, whether it's digital currencies, and whether it is the wealth created by the crypto investors, which has been in the news for last maybe 3 to 6 months, can be channelized into into this deep problem that we have. Which, if we can solve that, we have another $1 trillion growth in our GDP. So that's kind of a nutshell of what we are trying to do there.
Point taken, Sanjay. I mean, as you mentioned, it's not just the SMEs, it also is various startups, the entrepreneurship that we see coming in for India that really is capital hungry at this point in time. So is your sense is that the regularized investments in crypto from approved exchanges is the way to go for it? I mean, do you think a lot can be achieved via that?
I think what we really need to focus on is generating the right information collateral. Right, the information collateral comes from all these businesses which are increasingly becoming digital, or even students, or even small businesses and so on. So as they are putting their data out there, which could be mobile data, which could be data related to their invoices. Now we have e-invoicing in the GST world. So there is a lot of validated data that's coming through by every small business. Now we have a way for all that data to be put on a new technology, which is called blockchain, right? And blockchain, really what it does is it ensures that across the chain, the data is the provenance of the data is proven. So once the data is there on the blockchain, it cannot be changed. So it's immutable data. So if an individual who has data but does not have a hard asset like a house or a real estate property, it's hard to get a loan, purely cash flow backed loan, because the data has to be provenanted. So that's really what we're trying to bring together, these different elements, the new data that India has created with all the with Aadhaar, UPI, GST. More will come with the data empowerment framework that is being talked about. We could have telecom data and many other pieces of data in a safe and secure fashion with the consent of the owner of the data, that is the the account whose account it really relates to. That data plus the technologies such as blockchain, digital currencies, and then at the other side are the providers of capital. The providers of capital could be the conventional providers, which is the banks, financial institutions, NBFCs, and foreign investors, and so on and so forth. In so-called conventional system, that is obviously one way. The other way is we try and continuously innovate on the sources of capital. And one such source of capital could be the crypto investors, right? So all said and done, the total market capitalization of crypto world right now may not be that big, but it's not small either. So it's almost more than $2 trillion, which is still small compared to the global capital markets, which is roughly $100 trillion plus. Or even if you look at just gold is $10 trillion. But this is growing at roughly about 100%, and sometimes even more than 100% per annum. And it's kind of becoming very, very important piece of capital out there, that if we can find a way to channelize. And then there is this new whole movement called DeFi, right? Decentralized finance. Now, decentralized finance is roughly about 100 billion out of that $2 trillion, but it was practically nothing about 2 years. So it's grown really fast. What it does, it provides something called smart contracts and programmability. And programmability of money on the top of data is really the way that we can attract some of this crypto capital that's generated into solving the problems. And that could come through exchanges, that could come through other dedicated conduits that we may need to think about. Obviously, this is a very, very sensitive area, and one needs to really take steps looking at both the past as well as the future. There is transparency, there is ability to ensure AML, that is anti-money laundering. So one has to really look at all of those things together and then find the right way. But I think overall, one is just trying to figure out why can't we use this new pool of capital and maybe find a way to get our SMEs funding, get our students, startups, farmers, small businesses in large supply chains. That itself could be a $3 trillion financing gap in terms of supply chain. So there are many, many, many. It's just that all these are small and they need to be done programmatically. And that's where crypto capital could be very useful.
So when we talk about crypto investors, would you say that they are more risk tolerant than the existing financial institutions? And how would you read into that? You also spoke about DeFi or decentralized, finance. How close or how open do you see India right now into adopting something like that?
The DeFi or decentralized finance is itself very, very new. So while the world of crypto is maybe about 12 years old, since maybe the Bitcoin started, which was in 2008, just after the global financial crisis, DeFi itself is probably not more than 1 to 3 years. And as I said, the pool of capital that is coming into DeFi is currently still small compared to the size of crypto capital itself. However, it's growing very fast, like I said. And more importantly, the DeFi ecosystem is basically just a set of programs or smart contracts that are put on top of existing digital assets, which could be cryptocurrencies or which could be what is called as stable coins, which are another sort of new invention which has all come through in last few years. So that capital can be programmatically invested through DeFi. Now, currently, most of the DeFi protocols are still collateral backed. It's just that the collateral there in that is the underlying coins or the cryptocurrencies or the digital assets themselves. So they are still not become non-collateral or information collateral based. There are a few promising new startup ideas that are coming up in mostly the West, which are purely uncollateralized. So we will really need to formulate some of those new information-based DeFi, and India could be really at the forefront of this. Because there is the whole development that is happening at breakneck speed right now in terms of something called central bank digital currencies, which we can talk about later. Very, very important. China is somewhat far ahead in the game. US and Europe are looking into it. India is also known to be looking into it. But more importantly, we can create this information-based, collateral-based DeFi, and then CeFi, which is decentralized finance or traditional finance, could automatically also get a leg up, and they will also start doing cash flow lending far more than what is currently being done. So there is a change in DNA, change in the overall mindset that this new so-called risk-tolerant pool of capital that you mentioned, and rightfully so, I think, because they're sort of new, they are programmatic, they are looking at future rather than past, and they are looking at data. Most importantly, they could be very, very good vehicles to achieve that change in mindset.
That point is well taken, Sanjay. But with that, it's time for a short break. When we come back, we'll talk about many other concepts in sense of global learnings, crypto crowdfunding, and also IndiaStack, something that has been a brainchild of iSpirit on how that really promotes crypto into the Indian markets after this very short break.
WazirX and CNBC TV18 present Crypto, Digital Assets of the Future. WazirX and CNBC TV18 present Crypto, Digital Assets of the Future.
Welcome back, and we are in conversation with Sanjay Phadke. Sanjay, hi. There also is this conversation about the need to include crypto and proposed digital rupee into IndiaStack. Do explain to our viewers on what that would stand as and what is IndiaStack all about.
So IndiaStack is a set of digital public goods. And you can look at IndiaStack.org, the website, which gives all the details and some of the things that India has, become known all over the world over last, let's say, a decade. Some of those have been definitely helped put together by IndiaStack, whether it is Aadhaar, the UPI, the GST, and the new data empowerment framework, and so on. There are many such initiatives. Including the health stack. So the idea is to put digital public goods, which is the new sort of world that we all live in, where everything has become a lot more digital. So what we have in the physical world needs to be replicated. So we need to be able to make use of the digital world far better, and that requires creating a set of infrastructure, which is what IndiaStack really helps with. Now, what does digital rupee do differently than what current? Let's say I have a phone and I have a mobile wallet in that, either a bank app or a app of one of the payment providers. Is that not digital rupee? No, that's not a digital rupee, because that's a currency, or that's the money which is the bank money. Ultimately, the bank has the account, or the payment system provider has the account. Whereas digital rupee will actually be like the cash which we have today in the digital form. And that's typically called CBDC, or central bank digital currency. The way we could use this is to leapfrog financial inclusion.
So the crypto industry is a 10-year-old one. It's worth trillions of dollars, as we've discussed, more than 100 million crypto holders around the world, and it's growing by 100% per annum, as we've seen. The Indian government has talked about on how it's ready to experiment in some shape and form onto this one. What is your sense? How can crypto wealth in a controlled manner, do you think it can solve India's financial inclusion issue? What is your sense on way forward from here? What do you think Indian government could be doing from here? If you were to suggest a way forward, what would that be?
There are two things that we could do. One is, as has already been talked about, there is talk about a digital rupee, or a central bank digital currency by India. That is talked about. That is in the works. We can sort of make sure that the design and the architecture of that ensures that it meets the requirements of financial inclusion. It leapfrogs the financial inclusion, and with the new technologies and available platforms, architectures, we have huge amount of programming talent in India is really the software powerhouse of the world, right? All said and done, we could design something which is really ahead of its time and meets these objectives with all the constraints that we have, that are also our sort of unique constraints in terms of size, in terms of numbers, and so on. So one is, we could definitely we should definitely look forward to the right CBDC for India to extend financial inclusion, to get all these non-included players start putting on data. The second piece is get the existing and the new system of capital to be channelized into this data and to this new pool of requirements that are coming up over a period of time, and will only again leapfrog in future. As we include more people, they will need more money, right? So can we start creating at least a first look at bringing some of this crypto wealth that's generated in a very controlled fashion, where the KYC is ensured, where we can switch off if required, in some sense, if things don't go. There is experimentation that you talked about, which is already an accepted norm in India for many new initiatives. So can we create some experiment, a sandbox, which is sort of risk is contained, but at the same time the potential could be very large, and bring some amount of crypto capital, see how it works. Does it meet the requirements of the tough problems that we have? And if we do see the results as coming positive in the early stages, then we could increase the flow a little and so on. And by that time, the centralized or the traditional financial system will also gear up to meet the requirements.
Sanjay, I have one final question for you. While we have spoken about the financial inclusion in sense of cryptocurrencies, digital currencies, that is there a global relevance to this? Has this been deployed anywhere else in the world?
Great question, Manisha. I think this is all really developments happening in lightning time, if one could call that. But everybody is looking at this. So I think 86% of the central banks around the world are talking about researching. Some are prototyping. Some have done actual first level tests, etc., on digital currencies. You would have heard about the DCEP, or digital currency of China, which has already been getting ready for the Winter Olympics. They see that as the future money in some sense, and they have big, as everything else Chinese, they have big sort of potential applications for those. US, Europe is watching closely behind. Singapore has done, MAS has done experimentation. So it's something that could really become true very soon. And as such, crypto as overall, I think that's clearly out. Globally, it's being seen as one of the new asset classes, one of the promising asset classes. The world that we live in is far more digital, and a more digital asset class, or a digital gold to some extent, is how some of those which have never been broken, like for example, Bitcoin hasn't been hacked over 12 years, which is really huge, right? So the programming, the decoders, and the entire intellectual property coming together, I think we are at the early stage of something really big that's happening. And 5 years down the line, if you were to look back at this interview, we could probably not even cover 20 to 25% of what is maybe likely to happen.
Oh, well, absolutely, yes. So the volatility is really passive when we talk about cryptocurrencies. It is now about various uses of this whole new gamut that has opened in front of us. And as you mentioned, yes, international pools of capital, to domestic and foreign transactions, to a technology that can actually change the way the world works right now. Sanjay Phadke, thank you so much for joining us and taking us through all of those ideas and opinions. We really appreciate your time. Thank you.
WazirX and CNBC TV 18 present Crypto, digital assets of the future. Focus. Ideate. Innovate. Enable.